Have you ever wondered how the stock market works and whether you could benefit from it? If so, you're not alone. The stock market can seem like a complex, intimidating place, full of numbers and jargon that only the financial elite can understand. But let's debunk that myth right now. The stock market is not some arcane institution accessible only to the wealthy or the well-educated. It's a marketplace, just like your local supermarket or online e-commerce site. Except instead of buying groceries or gadgets, participants buy and sell shares of companies. These shares represent ownership in those companies, and when you buy a share, you're essentially buying a piece of that company. Now you might be thinking, that sounds risky. What if the company fails? That's a valid concern. Investing in the stock market does involve a certain level of risk. But here's the thing, life involves risk. Every decision we make, from crossing the street to starting a new job, carries some level of uncertainty. The key is to understand and manage that risk, not avoid it entirely. And that's where the opportunity comes in. The stock market, when approached with knowledge and a clear strategy, can offer opportunities for growth that few other investment avenues can match. It's a place where fortunes have been made, where the seed of a small investment can grow into a towering tree of wealth. But let's not get ahead of ourselves. This is not a get-rich-quick scheme. Stock market investing requires patience, discipline, and a willingness to learn. It's a journey, not a sprint, and every journey begins with a single step. So, are you ready to take that step? Are you ready to demystify the stock market and discover the opportunities it holds? If so, you're in the right place. Over the course of this video, we'll break down the basics of stock market investing, from understanding what a stock is to developing your own investment strategy. By the end of this video, you will have a solid understanding of the basics of stock market investing. Let's embark on this journey together. To understand the stock market, we first need to understand what a stock is. Let's start with the basics. A stock is essentially a share in the ownership of a company. Think of it as a slice of the company's pie. When a company issues a stock, it's like they're slicing up their business into many tiny pieces, and each piece or share is then up for grabs. But why do companies issue stocks? Well, companies do this to raise money. Imagine you've started a company. You have a great product and a fantastic team, but you need funds to grow. Sure, you could take out a loan, but that would mean paying interest. Instead, you decide to divide your company into 1,000,000 shares and sell each share to raise the money you need. That's the basic idea behind issuing stocks. So what does it mean for you to own a stock? When you buy a stock, you're buying that tiny piece of the company. You're essentially becoming a part owner of that business. This doesn't mean you'll be making executive decisions or attending board meetings, but it does mean you have a stake in the company's success. If the company does well, the value of your stock might go up. If you decide to sell your stock at that point, you could make a profit. On the other hand, if the company doesn't do so well, the value of your stock might go down. Your ownership in the company also gives you the right to a portion of the company's earnings. These earnings are often distributed to shareholders in the form of dividends. However, not all companies pay dividends, especially those that are still growing. Instead, they might reinvest their earnings back into the business. In essence, owning a stock is like placing a bet on the company's future. You're hoping that the company will succeed and that your small piece of the pie will grow larger over time. So when you buy a stock, you are buying a piece of a company. You become a shareholder. Now that we know what a stock is, you might be wondering, why should you invest in stocks? Well, let's delve into the potential benefits of this form of investment. One of the main reasons people invest in stocks is for income growth. Over time, the value of stocks can increase, and when you sell your shares for more than you paid, that's called a capital gain. Now imagine that growth multiplied by several stocks in your portfolio over many years. That's the beauty of long-term investing. It can lead to substantial income growth. Next up, dividends. These are a portion of a company's earnings that are paid out to shareholders, typically on a regular basis. Not all companies offer dividends, but those that do can provide a consistent stream of income. Think of it as a thank you note from the company for investing in their vision and growth. Investing in stocks can also lead to financial security. By creating a diverse portfolio, you can build a safety net for your financial future. It's a way to put your money to work, rather than letting it sit idle in a low-interest savings account. Investing in stocks can help you reach your long-term financial goals, whether that's buying a house, sending your kids to college, or planning for retirement. But remember, investing in stocks is not a get-rich-quick scheme. It requires patience, strategy, and an understanding of the market. The stock market has its ups and downs, but historically, it has trended upwards. So those who invest wisely and hold on to their stocks during market fluctuations often see the greatest returns. And let's not forget about the sense of ownership that comes with buying stocks. When you invest in a company, you become a part owner. You're not just a bystander, you're part of the company's journey, sharing in its success. Investing in stocks can be an effective way to grow your wealth over time. It's not without risks, but with careful planning and a long-term perspective, stock investing can open up a world of financial possibilities. You might be thinking, this sounds great, but how do I actually start investing in stocks? Well, let's break it down into digestible steps. First things first, you'll need to open a brokerage account. This is essentially your gateway to the stock market. You can think of it as a special type of bank account, but instead of depositing and withdrawing cash, you use it to buy and sell stocks. There are many brokerage firms out there, each with its own unique features such as fees, minimum balances, and educational resources. It's important to do your research and select one that aligns with your needs and preferences. Next, you'll need to do some homework. And by homework, we mean researching potential companies to invest in. This might seem daunting, but it's not as hard as it sounds. Start by identifying companies that interest you. Maybe there's a brand you love or a product you can't live without. Look into the company's financial health, its competitive position, and its future growth prospects. Remember, you're buying a piece of the company, not just a stock. Once you've done your research and found a company you believe in, it's time to buy your first stock. You can do this through your brokerage account. Decide how many shares you want to buy and place your order. It's as simple as that. Now you may be thinking, what if I don't have a lot of money to invest? That's perfectly okay. You don't need to be a millionaire to start investing. In fact, starting small is not only okay, it's recommended. Investing is not about making a quick buck, but about growing your wealth over time. Even a small amount of money can grow significantly over the years thanks to the power of compound interest. Remember, the important thing is not how much you invest, but that you start investing. It's never too early or too late to take that first step towards financial freedom. So what are you waiting for? Let's get started. Like any financial decision, investing in stocks comes with risks and rewards. Venturing into the world of stocks is akin to embarking on a thrilling roller coaster ride. The ride could be exhilarating, with highs that leave you breathless, but there are also inevitable lows that might make your stomach churn. This is the essence of market volatility, the constant ebb and flow of stock prices. It's a risk every investor faces. One day your portfolio might be soaring high, and the next it could plummet into the depths. Market volatility isn't the only risk. There's also the potential loss of investment. Every dollar you invest in a stock is a dollar at risk. Companies can underperform or worse, go bankrupt. When this happens, the value of their stock can fall dramatically, and you might not be able to sell your shares before suffering a loss. While these risks might sound intimidating, it's important to remember that risk is a fundamental aspect of investing. It's the other side of the coin that is reward. The potential for high returns is what makes stock investing so appealing. Stocks have consistently provided greater returns than other types of investments over the long term. But the rewards of stock investing aren't limited to potential high returns. There's also the power of compounding. This is when the returns on your investment start earning returns of their own. Think of it like a snowball rolling down a hill, gathering more snow and growing larger as it goes. Over time, compounding can significantly increase the value of your investment. In essence, stock investing is a game of managing risks and rewards. It's about making informed decisions based on thorough research and careful consideration. It's essential to understand that the potential for higher rewards comes with higher risks. So before you dive into the stock market, take a moment to consider these risks and rewards. Understand them, respect them, and learn how to navigate them. Because in the end, it's not about avoiding risks, but about managing them effectively. It's essential to balance the potential gains with the risks and make informed decisions. Now, let's talk about some strategies that can help you be successful in stock market investing. First, let's consider diversification. This is a strategy that involves spreading your investments among different types of assets and sectors. Imagine your portfolio as a pie. You wouldn't want to fill it with just one type of fruit, would you? Instead, you'd want a variety of flavors to balance out the taste. Similarly, diversification in investing helps balance out the risks and rewards. If one investment doesn't perform well, others might do better, reducing the potential losses. Next, we have long-term investing. It's easy to get caught up in the daily fluctuations of the stock market. But remember, investing is not a sprint, it's a marathon. Historical market trends show that despite short-term volatility, stocks tend to increase in value over the long term. So don't be deterred by the ups and downs of the market. Stay the course and think long-term. Regular monitoring of your investments is also key. This doesn't mean watching the stock market every minute of every day. Instead, set aside regular intervals, say, monthly or quarterly, to review your portfolio. This helps you keep track of how your investments are doing and make adjustments as necessary. But perhaps the most important strategy of all is continued learning. The world of investing is vast and constantly changing. Staying informed about market trends, new investment opportunities, and economic indicators can help you make more informed decisions. So read books, attend seminars, listen to podcasts, or find a mentor. The more you learn, the more equipped you'll be to navigate the investing landscape. Remember, successful investing is not about getting rich quick, but about making informed decisions and being patient. So take your time, do your research, and keep these strategies in mind as you embark on your investing journey. Let's take a moment to recap what we've learned about stock market investing. It's a world that may seem daunting at first, but with the right knowledge, it can be a rewarding journey. We began by unraveling the mystery of the stock market, which is not a casino but an opportunity. An opportunity to own a piece of a company, and that's what a stock is, a share in the ownership of a company. When you buy a stock, you are buying a small piece of that company, giving you the right to a portion of the company's profits and assets. But why should you invest in stocks? Well, historically, investing in stocks has proven to be one of the most effective ways to build wealth over time. It gives your money the chance to grow, potentially outpacing inflation and helping you achieve your financial goals. Then we moved on to how to start investing in stocks. It's not as complicated as it might seem. You start by setting clear financial goals, researching companies, and buying stocks through a brokerage account. It's important to remember that investing is not about making quick money, but about growing wealth over time. Of course, investing in stocks is not without its risks. The stock market can be volatile, and prices can fluctuate wildly in short periods. But with risk comes reward. The potential for high returns is what attracts many to the stock market. It's all about finding the right balance between risk and reward that suits your investment goals and risk tolerance. We also explored some strategies for successful investing. Diversification is a key strategy that can help you spread your risk across different types of investments. Then there's the buy and hold strategy, where you invest in a stock and hold onto it for a long period, regardless of market fluctuations. This strategy is based on the belief that over time, the stock market will deliver a good return despite short-term volatility. So, what are the next steps? Continue to learn and stay informed. The world of investing is constantly evolving, and the more you know, the better decisions you can make. Consider working with a financial advisor or joining an investment club to gain more insights and experience. And finally, start small. You don't need a fortune to start investing. Even small amounts can grow into significant wealth over time, thanks to the power of compound interest. Now that you have the basics, you are better equipped to start your journey in the stock market. Remember, every investor started somewhere, and today you've taken the first step.